Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news Canada has conceded it has lost its dairy dispute with New Zealand. But first in the US, actual initial jobless claims rose sharply to 261,000 from the previous week, but that was less than seasonal factors would have suggested. There are now 2.017 million people on these benefits, 4% more than a year ago, and the most in 4 months. After 3 down months, the fully fed factory survey recovered in July. New order intakes rose, but also rising was the prices firms paid for their inputs and what they charged their customers. Safe behind a tariff wall, these firms are showing the expected reactions, ones that will make them internationally uncompetitive. Also rising were US retail sales in June. This also came in after 2 retreating months and was not expected. Year on year, these sales are up 3.7%, of which car sales rose 5.3%. Other than vehicles, the rise was 3.3% and still quite positive. However, 2.7% of that can be accounted for by CPI inflation. US factory activity and retail sales may be rising, but business inventories are not, and that is a resilient sign. One sector not showing any resilience is the house building sector. The NAHB sentiment survey shows it remains at a low ebb, down near its 2022 levels. Affordability issues remain at the heart of the sector's woes, and they're hardly likely to improve as tariff taxes flow through. In Canada, they have quietly conceded that they have lost their dairy access dispute with New Zealand and will now honour the CPTPP treaty agreements. Although the US is not a party to this dispute, the most favoured nation clauses in its North American treaty agreement probably mean wider access for others to the Canadian dairy market. Across the Pacific, and continuing its yo-yo pattern, Singapore's June exports jumped. In fact, they rose 14% from May to be 13% higher than year-ago levels. In Australia, their June labour market softened. They were expecting a jobs gain of 20,000 but only got 2,000. Their jobless rate ticked up to 4.3%. As a result, financial market pricing for an RBA rate cut on August the 12th have risen. And inflation expectations in Australia are staying stubbornly high, although not as high in July as they were in June. The Melbourne Institute's survey of consumer inflationary and wage expectations came in with inflation expectations at 4.7%, which was down from June's 5%, but apart from that, it's still its highest since mid-2023. Expected wage growth fell slightly in July and remains relatively weak. A softening labour market, but very high inflation expectations, and a frothy real estate market will all make the RBA's assessments very difficult. More globally, container freight rates fell 2.6% last week from the prior week to be 55% lower than year-ago levels. But those year-ago levels were unusually boosted by Red Sea tensions. Currently, outbound rates from China are the weak spots in this market. Bulk cargo rates rose a sharp 34% last week to be back to year-ago levels. But to be fair, these current overall levels are basically average over the past 35 years. So in inflation-adjusted terms, they're actually very low. The US Treasury 10-year yield is now at 4.47%, little change from yesterday at this time. And Wall Street is firmer today, with the S&P 500 up 0.6%, enough to claim a new record high. Good corporate earnings are driving the mood. And the price of gold will start today at $3,336 an ounce, down $18 from yesterday. American oil prices are up $1 at $67.50 a barrel, while the international Brent price is now just on $69.50 a barrel. And the Kiwi dollar is now at 59.3 US cents, down 25 basis points from yesterday. Against the Aussie, we're up 30 basis points at 91.4 Australian cents. Against the euro, we're up 10 basis points at 51.2 euro cents. That all means our trade-weighted index starts today at just on 67.2 and actually unchanged. And the Bitcoin price starts today at $119,100 and essentially unchanged from yesterday as well. Volatility over the past 24 hours will remain modest at just on plus or minus 1.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.